Hey guys, what's up and welcome back to this YouTube channel. It's Igor and
Neetu.
guys, today we have Neetu and she's going to be talking about mortgages a lot, guys, and about the interest rates and everything. Let's walk this way because the sun is getting into our eyes, and we'll be showing you a little bit of Calgary downtown, and we have a beautiful Bow River over there.
Yes,
So,
and we are right now at Edworthy Park.
yes, guys, so we want to talk a little bit about something like, for example, buying a new home and interest rates, Bank of Canada announcements. Neetu, where do you want to start?
Well, we have to first start with definitely the recent news that was Bank of Canada cutting down the interest rates. Now, the rate is at 5.95, which does not mean that that is going to be your interest rate. Well, it's going to be much more lower or higher depending on what exactly your options are.
So basically what Neetu is trying to tell you guys, I'm going to translate it to basically my language and simple language. That is what she's saying is that interest rate based on the Bank of Canada is the prime rate for them. It does not really mean that it's the interest rate that you are going to be getting when you are getting a mortgage. Simple language like that means that what you see on the internet is not exactly the truth after you come to see a mortgage broker.
Yes, so definitely it is the complete application. So your entire profile and what exactly is your credit score and what exactly is going to be your down payment. So, and whether you're self-employed or whether you're unemployed. So all that factors come into place. It's not just the rate, right? But the reason why there's so much hype about it is lower the interest rate, higher is going to be your budget. So let's say right now you're only being able to be buying, pre-approved for buying a condo, but now since the rates are going to go down, you may be able to buy a townhome or even a semi-detached. So that's the reason why everybody is getting so hyped up, and obviously we need this rate cut, right? Because a lot of companies are going bankrupt, there's unemployment rising, so
it's not all about the birds, guys. The birds, I don't know if you're going to hear it on the microphone. I hope it silences it. Guys, the interest rate is not only about the housing, it's about general economy and everything. So in general, the real estate only takes, I believe, 20% of the entire Canadian economy. So it's not everything. It's all about people's spendings, it's credit cards, it's your car payments, it's everything. So the interest rates, that's why they do that. But on this channel, we'll be talking about how it impacts in terms of your mortgages or your pre-approvals, guys. And the reason why Neetu is saying is pre-approvals are going to go up and people's budgets are going to go up is, I guess, because of the what is called stress test, right?
yeah, it's stress test. So now there is like a news that they might be removing that. They have not yet decided, but there is definitely no stress test when you are refinancing. So basically when your mortgage is coming to the end of the term and they don't really have to look at the stress test. So there are a lot of changes that's happening, like literally every single month. Starting from September, and you cannot imagine the kind of news that we have, our mortgage brokers, that we have to keep in our mind, irrespective of the fact that what's the rate, what is exactly is the best rate available for 3-year, 5-year, 4-year, like it's just getting overwhelming. But regardless of that fact, the thing is that there is going to be this is going to be a political issue too, right? So one party is going to say that, oh, this is what we bought about, and then the other party is like, no, this is what you did not do.
But the truth is, me and Neetu, we purchased our first home before stress test even existed, right?
Well,
so when we were buying it, there was no stress test. They were about to just implement it. So
the thing is that we didn't even research anything. We decided that we are going to buy a house. We had the down payment, we had the pre-approval. We decided that, okay, for now, this is enough to substitute. Now that's the key point. Substitute the rent. This is enough for us, just the two of us, to live for quite some time, and is basically a starter home.
Yeah.
We were not looking at a 2,200 square feet home,
Yeah. It was a condo.
Yes, where we had to substitute the rent. So that's what we were looking for, and we got it. Like, we didn't even research whether the interest rates are going up or down.
We didn't really give a damn, guys. It's all about like, oh, do we pay, do we have something of our own and we pay off our own debt, or we just rent and pay off somebody else's debt and help them with their mortgage? At some point in your life, we thought you have to own something, and that's like And I remember one thing, that mortgage broker at that time, because I was not into real estate, she was not into real estate. They were just regular people, regular jobs and everything. And, you know, they just told us, yeah, you guys have to hurry up because they are about to implement what is called a stress test. And then your budget is going to go down. And yeah, that's how they pushed us to get it, make a decision sooner, I would say, because I was like, well, I don't know what the hell was a stress test. It's pretty stressful already buying a house, and there is a stress test. Is like, I feel like it's some kind of acupuncture to me. That's how I imagine myself. But in reality, it's they're checking your affordability, if you can afford, if the interest rates were to go up, as far as I understand. Is it 2% or what is it right now? Like,
Yeah, 2%, then what exactly is the interest rate? So let's say your rate is 4, your best interest rate is 4%, you will be stress tested against 6%.
yeah, this is crazy. Basically, guys, what Neetu is saying is your budget is your income, whatever the ratios they have for mortgages. What they're saying is that if the interest rates were right now 2% higher, what would be your maximum budget, and that's your limitation. So if they remove that, that just means that your maximum budget would go up, right? Because you have basically you can incur higher payments if there is no stress test. And that stress test, guys, whatever government of Canada is doing right now, and what else are they doing, Neetu? Like,
Well, there is definitely for new construction homes. So most of my clients don't want to buy these new construction homes specifically because the fact that they can use the 30-year amortization. So that's the plus point. So if you're a first-time home buyer and if you're buying a new construction home, you can extend your amortization, basically the time taken to pay off your loan, from 25 years to 30 years. So that's a good thing. That's going to lower down your monthly payment. And essentially, like, many of my clients are even making the closing basically when they get the keys after December 15th, so that they can use this benefit.
So that they fall under the new regulations. So basically,
Yeah.
what you're saying is, right now they're going for 25-year amortization,
Yeah.
and then before they get the keys for the property, they're like, oh, I'm going to reapply at a
Yes.
30-year amortization, so my payments are going to be lesser. Yeah.
Yes.
It's a
So
hack.
if it's a new build, then yes, you can directly qualify for a 30-year amortization. But if you're buying as an existing home, and if it's not a new build, meaning there has been previous owners to it, then you can only get that after December 15th. So
Okay.
so that's the change. So yeah.
And what the hell are they doing for January, Neetu? Like, there's also January 15th something. I'm already confused with all the news. What the hell are they doing after January 15th?
That's the refinancing option, where you are at right now at this point, you can refinance only up to 80%. So meaning you want to take money out of your home when you are at the end of the mortgage, or even before the end of the mortgage. That's what is called as refinancing. So by January, what they're doing is that you can refinance up to 90%. Up
Seriously?
to 90% of your home value. Now I have to dig into deep
So
whether there is a
basically-
limitation, whether you cannot go over some $1 million. Like, I think it's 2 or 1.5. I'm not sure, but I have to double check.
I have to be honest, this is something new because, like, aren't they supposed to increase the amortization to 30 years? Over 30 year for the new first-time home buyers, not only for the pre-construction as well? Is
Yeah.
it also January 15th?
No, that's December 15th.
So basically, guys,
You're typically, yeah, you're
I'm
not supposed.
totally blowing out of, guys, what the hell is going on right now with the housing. That's why I brought Neetu for this video, because like this news after news after news, I'm already losing track of it. So basically they're saying that they're like, okay, it doesn't matter, you don't need to have your 80% of the home paid off, 90% is good enough. So basically you can have more debt now and get more money out of it. Yeah.
Mhm.
Okay, so guys, this is actually pretty fascinating that I don't know whether
Because
it's a
they're
good thing
saying
or
many
not.
Canadians are, having so much of credit card debts. They are having so much of, line of credit debts, which is like, credit card debts, which is from 21% to line of credit, which is 10%. When you can combine all that, and then you can use your equity, that is your paid off mortgage, to pay off those debts, and combine that into your mortgage, you can use it at a 5% interest rate. So what is better? You
Yes.
can not only consolidate all that into one payment, and you pay lesser interest rates. So that's what they are trying to do. So
Yes,
so that Canadians
so
will feel
basically-
better, and in a way that they are not as miserable as they were before.
Guys, I think let me show you just how beautiful the weather is here. So to show you a little bit where we are, on a Bow River over here. And I want to say, guys, it's also, I think it's called debt reconciliation, consolidation.
Consolidation. Yes.
Consolidation. So basically, guys, it's a very difficult term for me, but essentially what they're saying is that, you know, guys, if you own a home and you have a huge debt, and lots of people in Canada, lots of Canadians have stupid debt, and stupid debt, I mean, is like, you know, you traded in your car 3 times, and your car is worth $20,000, but you own $35,000 for the car, and you know, other stupid debt is credit card, like $50,000 on the credit card, other things, because this is ridiculously high interest rates. And apparently, you could use some equity of your home to get another loan to pay off that debt, so that your interest rate, what would be the interest rate? Instead of 22%, 21%, you know, or a line of credit like maybe, I don't know, 12%, depends on your credit score. So what would be like the interest rate? Is it like same as mortgage basically, yeah?
Yeah, it's going to be closer to 5% now, depending on, you know, how much exactly you want to take out, and all those factors again play into effect.
So basically, guys, you take that money, you pay off your credit cards, and then you start using them again. No, don't do that. Don't listen to this.
This
Is
is
terrible
basically, you
advice.
know, when you take out money from your home, I usually tell my clients, this is, guys, you're doing it as a last resort.
Yeah.
This is your last option.
Don't do that if you don't have to.
Yes, this is your last option, because now you're using your paid off debt to refinance and use that against your other debts. So this is now your last option for a change. So you
Yeah.
better change the way how you live.
Yeah. Oh, yeah. Don't use your credit cards. Don't max out and make minimum payments, and don't be in debt like most of the people here suffering in Canada. And it's like a way for your life of karma to get yourself out of that pit where you cannot make the payments, and you know, put it under a lesser interest rate, get out of it in a way, and don't do that again. And basically, that's, I guess, what they're offering. I think it's actually a good option, because now you save up so much of money on those interest rates, because you're literally paying mortgage kind of interest rate. But also, guys, the ultimate goal of any real estate, and including for myself, guys, is to eventually pay off your real estate. So you want your homes to eventually be paid off, because you know, that's kind of the way of to have freedom, is once you don't have any mortgage payments. Like, guys, if you have a home and you don't have any mortgage payments in Canada, I think that's the ultimate way towards freedom, when you just pay property taxes, maybe some condo fees and utilities, because now you are actually, even working in Tim Hortons, let's say, making minimum wage, you'll be still way off better than those professionals who have to pay mortgages, because mortgages are just such a huge chunk of our expenses, I believe.
Now, not only that, because of the rates, that's upcoming rate cuts that's coming, a lot of people are moving away from fixed rate mortgages, which is what we have,
Yeah.
to a variable rate mortgages. So if you really qualify to make that change, I would recommend you to go for a variable rate, because definitely the you know, Bank of Canada is now going to be drastically reducing. So it's better for you to not get tied up in a permanent contract for a fixed rate mortgage, where your payments is going to be fixed, rather than, you know, variable rate, where your payment is going to be decreasing now, that because the Bank of Canada is going to cut the
Yeah.
rates. God forbid that there is not going to be an increase. If that's going to happen, if you think that's going to happen, it's better to switch directly from a variable rate to a fixed rate, because when you are going for a variable rate, you do have the option to change into a fixed rate mortgage. There is no penalty if you do that.
Oh, so you can do that, yeah?
Yeah.
So you can do, oh, that's pretty good, guys.
Yeah.
I want to also say that I wouldn't trust Bank of Canada anymore, because they told us before they hiked up these rates just not too long ago that they're going to be low for years, and a lot of people listened to this. What's this guy's name? I forgot this guy. The guy who's in charge of Bank of Canada. He came out and he just assured everyone, and then he just turned around and did 180, and he increased the interest rates like ridiculously high, and a lot of people's payments went up by so much just because of that, just because of that trust. So I want to say, guys, you know, don't trust anyone with your money, in terms of especially Bank of Canada. You know, even I wouldn't trust anyone with that. Like, you have to make your own educated decision. I just want to say that Neetu told me one thing, and I didn't know that before, because she's a mortgage broker and I'm just a realtor. You know, guys, I'm like a middle class dropout. I'm just joking about that. It's my dark humor of Eastern European guys. But anyways, so a lot of people are calling me and they're asking me this question, and I'm like, well, I don't know what the answer is. They're like, Igor, interest rates went down, but fixed rates went up. What the hell is going on? And then Neetu told me, what did you tell me? Why is it happening that the fixed interest rates are higher, even though like the lenders went and increased it instead, and you know, variable rate went down all of a sudden?
Well, right now the variable rate is higher than the fixed rate.
Okay, then I'm totally out of.
Because now they are giving more discounts to fixed rate because eventually they can capitalize on when the rates are lower.
Yeah.
So they are right now somewhere, 5-year variable is somewhere closer to 6% or 5.5%. But best fixed rate is going
Yeah.
to be closer to 4%. So by the time variable is going to catch up to a fixed, it's going to take some time.
Yeah.
And that's the reason why the banks want you to be, going for fixed, because they can capitalize later on once everything falls down, meaning the variable rate is almost as similar or lower than the fixed rate.
So essentially, from what I need to explain to me also before, is they somehow put it based on the U.S. bond market, right? This lenders. Which rate are those that are connected to the bond market?
There is a bond market in Canada. So Canada 5-year bond market, that's impacting directly our rates. And then we have the US economy, their employment, their inflation rate, our inflation rate. I mean, if you go in details, which you don't really want to and have to, you can really pinpoint into so many factors. But that's not the point. The point is the rates are going to go down.
Yeah.
By spring market, it's going to be bonkers. Like, I don't know whether it's going to be in multiple offer situation again, or whether there's going to be bidding wars. Like, I don't know what's going to happen.
We forgot to say about the 50, not only amortization, we forgot to say about the down payment. Minimum down payment for first-time homebuyers is going to be $1.5 million on top of this.
Well,
so I would say
it's extended from 1 million to 1.5.
It's huge.
Yes, for first-time home buyers, which is very few who can afford that.
But if they remove the stress test and they cut down the interest rates, and they do all of those 30-year amortization, there'll be a freaking lot of people who would be able to afford that. Just think about it. Now, down payment for, guys, I'm a little bit good with arithmetics. So, for example, you needed $300,000, right? Down payment for 1.5 million. Now it's going to be $125,000. So that's basically.
You can buy two 1.5 million.
You sold your condo in Bombay, and now you have enough money to put down payment to buy a property like that as a first-time home buyer.
What they don't say is that you also need the income to qualify.
That's
if
true.
you are going to put half of what you used to put before.
But now it's the same kind of income if it's pretty decent, right? And interest rates are going down, and the amortization is lower, and if they on top of it, if they remove the stress test, you'll be able to buy more. If your income qualify you for $1.2 million, next thing you know, maybe you'll be able to buy 1.4, 1.3, I don't know. Neetu would know better once she runs the numbers.
Yeah. But with that being said, like the spring market, I mean, it's something that I'm looking forward to. And I wouldn't say as a first-time home buyer, you should be too, because I feel that there's going to be a lot of stress. When you're a first-time home buyer, not only the stress of buying a new home, but also to navigate through this multiple offer situation when it's going to happen. And
it's going to be good times for realtors to cash out on commissions, but it's going to be a terrible, terrible time for anyone who is, if it goes into multiple offers, running around and shopping around for a lifelong property when it happens. Because I think it's the worst thing, guys, if you have to make a decision in 15 minutes like it happened just not too long ago. And even in the summer, it happened here in Calgary as well. It's a terrible situation. So I say, guys, before that happens, I think if you have an option to buy something before that happens, and maybe follow Neetu's, there are some people who are coming for creative advices for Neetu in terms of postponing your closing date even past January. So you kind of lock in at the current market before those regulations and the rules come in, and then you get the keys once it comes in, and then Neetu can explain it. But basically, she'll tailor it. She'll explain to you later how it's done if you are doing that. But you could technically lock in at the price that is right now. It's like in in Ontario for assignment clauses. People would walk in what the market is right now on the bet that these things can trigger the market. And this way, guys, if you're just sitting and waiting, don't wait until the market and don't wait until everyone starts running, because when everybody is running, it means that you're behind because you see everyone ahead of you running. Oh, that's too late, and that's not the right time to buy. That's the right time to sell. So if you're a buyer, I would say, right,
Hmm.
just don't wait for everyone to run. Make your own choices, because that's going to be a mistake. And I bet you my phone is going to start ringing like crazy when everybody else is going to be already running, because people are never proactive. Everyone is always reactive.
Right. So what are the key takeaways? The key takeaways is, yes, with the rate cuts, your budget is going to improve, your pre-approval is going to improve, but you have to act now.
Yeah.
Second point is, it's going to be crazy next year spring market, so you have to be very careful on what decision you're making. Are you making the decision to wait and looking forward to the spring market, or are you going to be trying to do something right now?
Yeah.
What else? Like, if you want to do a refinancing, probably it's a better way to, if you're really in a crunch money, probably it's a better way to wait until the 90% rule kicks into effect. But I would say, you still will have to recalculate what exactly you're going for, because if you are breaking your mortgage before it's at the end of the term, there is going to be a penalty. So you have to
Yeah.
understand how much that penalty is going to be, regardless of all the news that's coming out. So make your informed decision. That's what I would like to say. You choose somebody qualified, a mortgage person like me, or
Or you choose something qualified mortgage like Neetu still.
so that
Guys,
you know
she's
what exactly your options are, and you know for sure that you are not going to be worrying after you signed away your life away.
yeah, guys, and I think that's the priest. Amen. I think is it Orthodox priest or not? It looks like Orthodox priest. And
I'm not
anyways,
sure.
guys, I want to say the one thing: need to work with DLC Clear Trust Mortgages and IMBD Realty. So just so that we disclose this in this video, context will be description of this video. I want to say, guys, also say that yeah, there is more things to real estate than just buying and selling real estate, and that's why mortgage brokers come in. And I'll tell you guys, there's lots of things that you can learn from mortgage brokers that you would never know until you have literally one in your family like that. People actually they're increasing the equity portion of your property. For some people this would mean lowering down their debt. For other people that would mean that they would be able to put equity, to put that money as a down payment to buy and invest into more real estate and hold on to more assets. So there's lots of things that people do with their money. You just have to know that which options you have and what tools are available to you, and that's why there are professionals like ourselves that are available to guide you through such things, and especially Neetu. And by the way, guys, we speak multiple languages. Neetu is not only speaking English, she
Mhm.
speaks also Hindi, Malayalam, and what else? Marathi?
Well, I do understand a little bit Marathi, a little bit of Gujarati, um,
And I speak Ukrainian, and Russian, and English.
yes, and a little bit of Tamil. I do understand. I don't speak, but
And I also swear in Arabic. But guys, that's the only thing I remember. I used to learn more Arabic. But anyways, guys, a variety of help that we can provide to you, and feel free to reach out with anything. Anyways, guys, we are going to head out and to go pick up the kids from the childcare, and yeah, we'll see you guys in the next video. And tell Neetu to make more videos like this, because she has so many topics to cover for you, especially about mortgages. So bye bye.